And I'd also like to thank everybody for coming out on a Monday night to talk about what I think is this really important and interesting issue, and for our expert guest Karl Mallon for getting up at some ungodly hour from the UK to chat with us, which we appreciate hugely, and of course Kate Chaney, the independent member for Curtin, who I don't think needs too much introduction at this point. So to begin with, I just want to talk briefly about the Australia Institute. We're an independent, not-for-profit think tank. We provide intellectual and policy leadership and conduct research that drives the public debate and secures policy outcomes for a better Australia. And we hope that tonight's event contributes to that. So tonight, what I'm going to do is I'll start with a little bit of a brief context for this discussion and talk about a few of the key points that from the Australia Institute's research into climate change and the impacts on the cost of living. And then I'll introduce Karl Mallon, and Karl Mallon is the CEO of Climate Valuation. He is an expert in the impact of climate change on property values, and his company actually has an online tool where you can get a report on your property and the likely impact of climate change on the value of your property. But they do very complex modelling and really interesting modelling. And I've spoken to Karl about this issue for years, and he's a really compelling and interesting expert. Then after Karl's spoken, I'll introduce Kate. And Kate, of course, prior to entering Parliament in 2022, Kate was a strategic advisor in the private sector and the not-profit sector, and I think, and a lawyer. And I think she's, really got a background where I think she would really appreciate the risks of climate change from the perspective of the private sector and the community as well. So I think she's sort of ideally placed for this, and she's really, during her term in Parliament, has really put climate change at the forefront, and I think she really understands the potential impacts and has a really clear vision on the things we need to do about it. So it's fantastic to have Kate here tonight. Thanks. I might get you guys to put the slides on that I've just got a few slides to go through that just touch on some of our research. But basically in February last year, on Valentine's Day, a huge storm ripped across Victoria, and it wiped out transmission towers, and power to about 500,000 people was cut off. There was 10,000 insurance claims, and it was, it was a pretty major event. But it wasn't. There's been much more major events, climate-related events in Australia over the last few years than this. But this was a pretty, a pretty important event with big costs. So I wouldn't mind if you guys are able to. Charlie, are you able to bring those slides up? Okay, so go to the first slide, if you can. Yeah, so that's the storm front that came over Victoria on that day. And next slide, thanks. And I live in central Victoria, and that's my place. I've got just a little cottage and an old barn. It's a historic building. It's been there for well over 100 years, but it had a new roof put on it a few years ago. And I was sitting there working from home because my office is in there, looking out the window at the view, and suddenly, this big storm front came over. And you can imagine my surprise when the roof lifted off and went flying, or part of the roof lifted off. Controls here. Part of the roof lifted off and flew 100 metres down the road. Now, it was kind of dramatic at the time, but it wasn't a huge, people suffered a lot worse than me. But I'm still a year later, I'm still negotiating with the insurance company, and my insurance premiums went up 33% last year, and I'm now paying $4,500 a year for a pretty modest cottage in central Victoria. So, but I'm, obviously not the only one dealing with these dealing with these kinds of impacts. This is insurance payouts since the start of the century. And because we're getting much more frequent and extreme floods, fires, storms, and all of these kind of really major events, there's massive payouts, like those floods in floods in Queensland, and and fires in Victoria and Western Australia and Queensland and Tasmania, and the floods up in the Kimberley, etc., have enormous costs, and not just in Australia but all around the world. And because the insurance industry is an international industry, when they have to pay out a huge amount, they have to pass on those costs to us in our premiums. So that's why our premiums are going up really quickly. And this chart just shows the blue line is the cost of is the CPI, so the rate of inflation in Australia, and the orange line is the increase in premiums over the last few years. So you can see insurance premiums are rising at about twice the rate as everything else, even during a time of inflation. So it's really big impacts on people, and a significant amount of people, about 1 in 20 people in Australia, are working for 7 weeks a year, so basically working from New Year's Eve to the end of February just to pay their insurance. So these are really big impacts. Now, today we've heard people jumping on the insurance industry, trying to demonise the insurance industry for price gouging people. Well, that's the profits of the insurance industry in Australia over the last few years. Right, so I'm not excusing whatever the insurance industry does, but their profits are going down because payouts are going up. So they're at risk, and if they go under, none of us will be able to get insurance, and that's a pretty scary prospect. It's not only insurance that's the issue. Climate change drives up the cost of many things, including food. So agriculture, climate change impacts agriculture, of course, and the world's food supply is pretty finely balanced. So when you have crop failures in one or several parts of the world, you can have a big impact on food prices, and that's already starting to happen. I won't go to this straight away, but the problem is, all of this is caused by putting more fossil fuels into the atmosphere. So we're heating up the atmosphere. It's driving up temperatures. It's driving these extreme events, and it's impacting the cost of insurance and food and many other things. So it's having a huge impact. And in a lot of ways, the current cost of living crisis can be traced back in some ways to climate change. Now, we're quite dependent on fossil fuels in Australia, and the irony of it is that as well as driving, and Australia is the third largest fossil fuel exporter in the world and the fifth largest fossil fuel producer in the world. So what we're doing has a big impact. We're making a big contribution to cooking ourselves and cooking the rest of the world as well. And gas exports from Western Australia, when you count the emissions from when the fuel is burnt overseas, are equivalent to 153 individual countries. So there's 153 individual countries with less emissions than the emissions from gas exports from WA. So it's a pretty big issue. But the irony is that as well as driving climate change, fossil fuels actually give us really high electricity and gas energy prices. They drive up our energy prices. And the reason is that fossil fuels are a really expensive source of way to produce electricity, particularly gas. And gas prices, gas would be expensive anyway, but it's even more expensive because our entire gas resource on the East Coast and West Coast, pretty much, or about 90% of it, is controlled by a big group of liquefied natural gas exporters, and they're able to make us compete with global customers for gas, so we pay high global prices for our gas. And this chart here is some research we did earlier, late last year, and it just shows. So in 2020, the McGowan government allowed Woodside to export domestic gas, onshore domestic gas from Western Australia's gas reserves, and what that did was linked the domestic market to the global gas market. This is exactly what happened on the East Coast. And on the East Coast, from 2015, when they started gas exports, gas prices and electricity prices tripled and then doubled again. Now, that has happened in Western Australia since 2020, since they linked those two. And at the moment, we're not feeling it as households because of government rebates and also the regulated tariffs in the state. But that will come. It's driving up. These companies are now able to make us compete for international prices. So we're not only, fossil fuels aren't only driving up costs because of climate change, but they're also just a really expensive way to produce our electricity and are driving up our power bills when we've got plenty of other options. So I'm going to stop there, and I'll hand over to Karl Mallon from Climate Valuation, and I'd just be really interested to hear what he's got to say on these issues.
So I thought I'd just provide a quick overview of what we do. So just a quick introduction to our business called the Valuation Group, but we haven't got a lot of branded that. Valuation, that's what I say. And also HCI, which provides analysis to companies and just and just to give you a bit of a sense of who some of the clients are in that particular area, that they are some of the big high street banks. We give data to the RBA. We work for some of the big miners like Rio. So the point I'm trying to get there is the big end of town, so to speak, is taking these issues very seriously. And one of the things that's been concerning us is sort of an asymmetry in the access to data, which is why we have the Climate Valuation company, which allows homeowners to look at the issues of climate change to their properties. And what you see there is that, the sort of millennial generation who are kind of switched on to climate change are taking these very things very seriously. They don't buy a house without checking what's going on with regard to climate change, and there's a lot to see, basically. So if you've sort of been following the papers, I just sort of pulled out a few articles recently. Someone who had been affected by one of the recent fires pointed out that their insurance premium before the fire had gone from $2,000 to $6,000, reflecting, Mark, some of your experience. They couldn't afford it. And so they didn't have cover. The fire came through and the house burnt down. They didn't have any insurance cover. In Lismore, if everyone remembers the Northern Rivers up there, we've seen a lot of events since there, but property prices have gone down there. There's an estimate that maybe there's been a 30% reduction in property value in Lismore, and one of that, part of that has to be that some of those properties are uninsurable, or they're in a grey area. Are they going to get bought back? Is there going to be a scheme to help them adapt and so on? Yesterday, you might have seen an article this was from Victoria, which was Gippsland. It's been rezoned. They've added sea level rise, and now there's 350 properties which are essentially can't be built on, or where planning has been withdrawn. So if you've got a private property there, good luck, but you won't be able to rebuild or whatever. So it's essentially those properties are becoming blighted. Now, they're being blighted without any scheme. There's no buyback scheme. There's not a coherent strategy of what we're going to do. And it's hard to figure that, people have bought properties, expecting that the government and the state government, federal government, the planning system is there to protect them in the same way as if they, buy a hamburger, they know it's going to be safe to eat, or if they buy shampoo and use it with their kids, they know it's going to be safe for their kids. And yet, the family home is not in a situation where it can be considered safe now. So, so these things are kind of starting to really unravel now. Again, to Mark's point, it is a global industry. The LA fires, which we all have watched, about a year before those fires, a lot of the insurers pulled out. And they pulled out cover, and it was very public where they were going to cover and where they weren't. And there's a very reasonable likelihood that we're going to see that in Australia. And it might not be a complete pullout, but we're not going to provide cover, but there are insurers who do that. But there are others who just price it according to what they need to price it for to get to, so they don't lose money. And in Lismore, they were paying insurance of about 15,000. I've seen policies up to $30,000 a year, where just for modest homes. So these things happen, and whether it's available or $30,000 a year is neither here nor there. No one can afford that. So the access to insurance is going to be a big deal. Now, if we look at WA, our calculations are there are about 40,000 properties that would be in our category of high risk, which means that uninsurability or unaffordability are a real threat. And remember, we don't set insurance, but we have a damn good guess at what the prices are going to be. And in a way, we're trying to estimate which way insurers are going, because we have to advise banks whether to provide mortgages. So I kind of want to unpick this for a moment, which is to say, what's the mechanism here that we should be really worried about? On the one hand, we've got high technology, high precision technology that allows us to identify risks to individual properties now. And we also have climate change, which is now being factored into the risk levels which are being adopted. Now, what that means is that insurers at a property by property level can establish prices or choose to withdraw cover. Now, legally, a person with a mortgage is expected to have insurance coverage for that property, and if they don't have it, they go into what's known as a technical breach. Now, it's not the same as not paying your mortgage, but you're in a situation where the bank starts to be very worried about whether there's going to be an event that's going to affect that house. And so what you have is a situation where someone who does not have insurance or can't afford that insurance is essentially playing Russian roulette, not only with their own home, but with the banks lending on that. And if a house gets destroyed and is not worth very much, you still owe the bank the full amount of money. You don't get to say, oh, here's the keys, I'm going to go somewhere else. You could do that in the US, you can't do it in Australia. So you still owe the bank the money for a house that might not even be worth that anymore. So we start to get into this concept of mortgage prisoners, which is you can't sell the house because anyone new coming along can't afford to buy the house. And we then get into a situation, as we're starting to see, is where the value of that property starts to decline. So this is what we're up against. And I think what we've also identified is that there are a number of areas in, I'll just shout out a few names, but Cannington and South Yonder are both areas with, they've got, I think Cannington's got 5,000 properties, the other 2,500, which are at what we would call high risk, essentially becoming uninsurable. Now, in both of those places, more than 50% of the properties are in that high risk category. So now you're not just looking at the impact on an individual property, you're looking at a community level, a community scale collapse in property value and essentially viability. And that won't just affect homes, it'll affect businesses, commercial, industrial, and so on. But other areas with very high percentages, Shelley, York, Northam, Collie, Baldivis, are all places where there are very high numbers of properties in that high risk zone. So that's the scary bit. The good bit is a lot of these things we can solve if we throw money at the problem. That can be adaptation, adapting to floods, adapting to fires, adapting to tropical cyclones. But that money can't come out of thin air. If someone can't afford the insurance, they probably can't afford the cost of adaptation. And so I think as a society, we've got an issue here, which is we've got a harm which is being caused by the use of fossil fuels. You know, lots of people are making very good money out of the export of those fossil fuels. And we've got those who are harmed having no financial resources nor the financial recourse to essentially address their risk, either that through adaptation or through property buybacks. So we find ourselves in a really perverse situation, which is in any other area, we would expect there to be a recourse from someone who is the victim of harm to have essentially recourse back to those who are the beneficiary of harm. Yep, and we've seen it with asbestos. The question is, are we going to deal with that with fossil fuels? Because at the moment, the legal system is not providing any protection to the victims. And if we don't do anything, we're going to see essentially a catalogue of individuals, families being put into financial adversity through every time an extreme event comes through. And in some cases, whole communities being thrown into adversity. So this is the challenge that we're facing. And, you know, I do applaud the Australia Institute for trying to take this on and raise the issue, and indeed with our elected members to take on this challenge, because I think this is a very serious issue that affects thousands and thousands of people. So I'll stop my comments there. Thank you.
Thanks, Karl. And now I'd like to invite Kate up to give us a few words.
Thanks. Thank you. Thanks very much, Mark, and Karl as well. And thanks for having me here today. I have to say it is fantastic having think tanks like the Australia Institute contributing to the national debate and thought leadership. One of the things about being an independent in WA is there aren't very many different independent voices here on these issues. And so I've been very grateful to think tanks for spending a bit more time, and the Australian Institute spending a little bit more time in Western Australia raising the issues here. So much appreciated. So I wanted to talk a bit about, I was going to summarise what we've heard, which I'll do pretty briefly, but then talk about what can actually be done. We know climate change is causing more extreme weather events, and I feel like I probably don't have to dwell on that point here, both catastrophic and non-catastrophic hailstorms, local floods, etc. Secondly, we know that because of climate change, households are facing increased insurance costs and declining access potentially. So that's becoming pretty clear. And I worked at Wesfarmers as sustainability manager about a decade ago, and we owned an insurance business there. And even 10 years ago, we were starting to see some of those trends and saying, of all of our businesses, this is the one where it's easiest to see that it's going to have a huge impact on the business model. 10 years later, the data has continued to bear that out. And we've seen, average home insurance premiums went up 14% in 22-23. It's a big step in one day, in 1 year. And we're seeing, since 2013, the insured losses each year have exceeded the combined losses of 2000 to 2004. Now, you'd expect a bit of natural variability 1 year to another, but that's clearly a trend. And what we're seeing then, as we've heard, 1 in 8 households are under home insurance affordability stress, and 1 in 20 households are paying 7 weeks of gross income on home insurance, which is pretty mind-boggling, really, when you think about it. And here in WA, and this is why we need these stories told here, Northwest WA is actually the worst in the country for increased insurance costs, double the cost of the southern 2/3 of the country. So it's very much a local issue for us. And we heard about those 40,000 properties that are at high risk from Karl. I had great childhood holidays at South Yunderup, It's a lovely little community there, and it would be very sad to see communities like that disappearing. Even Andrew Hall, who used to be the head of the National Party and now works for the Insurance Council of Australia, says that the growing frequency and severity of severe weather events is a major contributor to premium increases. It might not be the only factor, but it's definitely a significant factor. The third thing we know is due to extreme weather events, 1 in 25 properties are likely to be uninsurable by 2030. And Karl talked a bit about the implications of that and this growing chasm and the way that burden will not be shared equally. There'll be people who can afford to live in insurable areas and people who can't, and then have to live with that additional risk, which adds to stress, and we end up with this idea of mortgage prisoners, which is a concept that I think is pretty horrific in a country that prides itself on egalitarianism. And a third of damage from natural disasters between 2013 and 2023 was uninsured. So we're really going to see a whole lot more of that. The final thing that I think it's worth pointing out, particularly today, is that despite much of the media and political narrative about insurers taking advantage of consumers, the profitability of home insurance has actually declined. The margins are not abnormal, profits are going down, and we actually really need the insurance sector to be sustainable so that we can share risk across the whole population rather than it being a lottery. So what do we actually do about this? Well, there's a range of ideas on the table, and they come really from three sources. Firstly, there was a Senate committee that was established in May last year to look at the impact of climate risk on insurance premiums. And that report was handed down on the 26th of November last year and has some good recommendations in it. The Insurance Council of Australia, unsurprisingly, has been focusing on this issue pretty closely too, and has a range of recommendations. And then the third source of ideas of how we can address this comes from the climate science, which obviously is a big factor in how we reduce the size of this problem rather than dealing with it, once it's happened. And I think there are three types of actions that we can take, and they are increasing the resilience of insured infrastructure, increasing transparency about what's actually changing so that we address that information asymmetry, and then also stopping the change from getting worse through climate action. And I want to talk a little bit about each of those. First, looking at increased resilience. I mean, we're hearing that some insurers are rebuilding houses for the third time in 5 years. Now, the definition of insanity is doing the same thing over and over again and expecting a different result. This is a pretty clear message that we need to adapt how and where we build and invest in resilience and risk reduction. And there are a few ways to do that. Firstly is that government support, and Karl made the point about the need to share that risk fairly so that we're spreading the cost of damage that we're all in effect causing through climate change. The committee that sat last year recommended that the government increase the Disaster Ready Fund to $400 million per annum for investment in disaster mitigation and resilience measures. And the Insurance Council has said they want that to be made permanent and index that funding into the future so that it continues to be a sizable amount of money. The ICA has always also advocated for a 5-year, $2 billion resilience investment, which it says will deliver a tenfold national return on investment by 2050 to Australian households. So if we do this work now with a long-term perspective and adapt and actually become disaster ready, it will pay off, and we need that sort of long-term thinking. Another thing we can do in terms of adaptation is regulate, so buildings have to be more resilient. So the National Construction Code and standards can be adapted to make building stock more resilient so it can withstand destructive weather. And there's an estimate that would save us about $4 billion a year just changing those standards so that as we continue to build into the future, we are building things that will actually survive. And this would give people faith that the planning system will actually protect them. And Karl pointed out that we expect to be able to buy safe products. We also need to have the same faith in our planning system, knowing that if you comply with the planning system, then you're taking the steps that you need to take. Other things we can do around that would be reviewing land use planning. So we're stopping developing on floodplains, and that's a National Cabinet commitment. A mandatory requirement to consider risk for statutory planning, prioritising low-risk development areas for new dwellings as we do continue to expand, make sure we're doing that in the right areas. And eventually, we could get to a point where we're prohibiting housing development in areas that are prone to extreme weather events so that people don't find themselves in that situation. The third thing we can do on building resilience is incentivising consumers to make their properties more resilient. And this was a recommendation from the committee. We can require insurance companies to provide details of what price changes they'll make in response to resilience and disaster mitigation measures undertaken by the policyholder. So if you do these things, you can save this much money on your policy. And that sort of information will allow consumers to make good decisions if they're in a position to do so. And then we've heard about some private sector innovations like Karl talking about climate valuation. We do need these private sector innovations too, which provide that climate risk analysis to individuals so people can have a better understanding of what their choices are and the decisions that they're making. The second big sort of bucket of changes are about transparency, and that involves understanding what's changing. So the government, one of the committee recommendations was that the government would establish and maintain a national disaster risk map and database, which is accessible to the public. So people really get a better understanding of what's happening, why it's happening, and how it affects them. And then there's a whole lot of transparency stuff that's focused on preventing insurers from taking advantage. Now, obviously, when a sector's changing, people get very suspicious. You might have seen Peter Dutton came out today saying we're going to look at divestment of the insurance sector, as with supermarkets. And I think that kind of populist policy goes down well with people who are looking for a dog to kick when they're suffering cost of living pressures. And it's certainly much easier to kick the dog of the big insurance companies and acknowledge the problem that's creating this and deal with the core issue. There are some things that probably do need to be put in place to make sure that there is transparency about the insurance business model, and that, for example, requiring insurance companies to provide policyholders with a sufficient breakdown and explanation of their insurance premium costs and what's causing them. Again, adding to that public education so people can make informed decisions. And then another committee recommendation was that the ACCC monitor premium prices across Australia and publish that on a quarterly basis. I think we do need to look at those things, but this cannot be put down to greed on the part of the insurance companies. And even in that committee report, the Liberal senators who were part of that committee said that while they recognise that in many cases insurance premiums have been rising and rising fast, there's no evidence to support wholesale intervention into the insurance market, which I think is the sort of thing Peter Dutton's put on the table today. It did get knocked back by David Littleproud today and said, no, that's not our actual policy. It was exciting to think that the coalition might have a policy, but it turns out that wasn't one after all. So that transparency is a really important part. And then the last thing is mitigation, and that's where we come back to the climate science. Some of that can be done at a community level, and I know some of our councils are seriously considering what happens to the infrastructure they've got on the shore as we see ocean levels rise, sea levels rise, and those decisions do need to be made at a local level. At a local level, there are things individuals can do too. And I've got some copies of our net zero report, which I'm really proud of. We had 50 volunteers work for a year on what it would look like for Curtin, our community here, to get to net zero, and what that will take at a federal, state and local level, and what individuals can do. And we developed that as an advocacy tool, really, for people to take to their representatives at different levels and also make decisions themselves. And I think it is a great example of the power of community. We had 50 volunteers who had all sorts of expertise. They came together, they argued deeply and constructively about what the priorities were, and came up with a really positive vision of what communities can actually do and what we need our governments to do. Obviously, communities can't do the whole thing, so we also need those broad policies so that we are playing our part in stopping this problem from getting worse and limiting climate change. So there are a bunch of things we need to do around on that, ending fossil fuel subsidies, limiting new fossil fuel developments, ending the excessive use of offsets because we're not going to be able to offset our way to zero. Decarbonisation broadly, and there's a whole conversation about the opportunities for WA there, and also, talking internationally, playing our role, because each new fossil fuel extraction facility will contribute to higher insurance costs overall. It's not a direct link, but the indirect link is very, very clear. So I think the more transparency communities and the public has about how this is affecting their cost of living and potentially their access to insurance, the more we build community support for strong action on climate. And I think just in wrapping up, 2022 was seen as a climate election, and there was a real message that came through there that people do want to see greater action on climate change. 2025 is shaping up to be a cost of living election, and people are really feeling the pinch. But this issue that we're talking about today is really an intersection of those two issues, and it's an illustration of how climate change affects everyone, and unfortunately also potentially has the greatest impact on the people who can afford it the least. So I think at this election, it's going to be really important to keep that climate message on the table, but also make it clear how this is affecting people and why it's something that they should care about. So I think if we can continue advocating for those actions around transparency, around adaptation, and also around mitigation, then we have a pathway to hope, and that's certainly what I'm very focused on. So thank you.
Thanks, Kate. That was fantastic, and you too, Karl. We're very happy to have a bit of Q&A now. If people would like to ask questions, I'll take a seat as well, and you can direct questions to anybody you like. It's probably a small enough room to just stand up and ask a question, but there is also a microphone in the middle if people want to come down. Thanks.
Okay. We talked a lot about how insurance providers have. Thank you very much. We talked a lot about how there are so many parties that have to come to the table for us to be able to look at this problem from leading indicators, lagging indicators, being able to solve climate from the start, but also the impacts that we're dealing with right now as well. When we're talking about, I think, Kate, you mentioned a couple of recommendations in terms of prioritising development in low-risk areas as well in our communities too. But I'm not sure I heard property developers coming to the conversation and if they've had any involvement in this or what needs to be done to get them to the table as well, because it's not just insurance companies that can solve the problem on their own or government that can solve the problem on its own as well. So wondering if any of you have thoughts on that as well.
Thank you. So did everyone hear the question? Yep, great. Yeah, I mean, property developers have a role to play, but I think that getting the rules of the game right and the incentives right, then the market delivers the results that work. So part of it is making sure that we're not approving development in areas that are high risk so that we don't end up with that problem. But also, I had an interesting conversation with a property developer because housing is a massive problem too. And I was asking about the the sustainability of some of the properties that they were building. And they were saying there just isn't the demand there. So people are not asking the question because they're so driven by price. No one's asking about insulation or, these sorts of things. And so I think it's chicken and egg. And really, the public also needs to be asking those questions. So the more these issues, the more this is framed as a cost of living issue and an equity issue, people will start to ask those questions, and then there becomes some value in that. So we can regulate, through the National Construction Code, and through zoning and what sort of things that we approve. Then I think there also has to be that demand. I suppose it's probably unrealistic to think that property developers will just do it out of the goodness of their heart, but we need to make the incentives align so that there's demand for it.
Oh, no worries.
Can you hear me, Mark?
Yes, Karl, we can.
Maybe you can.
Yes.
I might just jump in on that one as well, because I think we should just, let's just be fairly unvarnished about some of this stuff. A developer who comes in has got one of the lowest risk profiles. A bank's in it for 30 years. An insurer's in it for kind of a year or two, depending on how quickly they might want to use a policy. A developer is done as soon as they've sold the property. So there's a very little incentive for the developers to maintain, to look at resilience. Now, to Kate's point, we don't necessarily have the signals in the market that a resilient property is going to be worth more. And we also, just to recognise, I think the person who asked the question was right on the money in terms of you've got several actors, all of whom are trying to not necessarily in a position to work together, but they really need to work together. But local governments are in a terrible situation because they're trying to often block development in high-risk areas. And you can imagine they've got a developer on the other side of the table with a lot of money and big lawyers, and they're pushing through to get developments away. I mean, good on them, that's their job. But they're not necessarily there in 10 years when the property collapses in value and a family is, left financially destitute as a result. So this is where I think, getting that alignment, as Kate says in the building code, so it's very clear, developers in a way will work to whatever the rules are. And so what we really need to make sure is all the rules are even, so all the developers are working to the same thing. And then you can also see progressive developers, and Stockland's an example. They're really trying to build resilient properties, take a long-term view. So you want to make sure that the ones who are trying to show the way are being incentivized and being recognized. And I would hope also that we'll see a situation where, like you get on your fridge, which is, this is energy efficient, or my washing machine's water efficient, that someone puts a stamp on a house and says, this is insurance efficient. It's just great buy. You'll save yourself loads of money. You might pay a little bit extra up front, but you'll save yourself loads of money on insurance, and it'll escalate in value. And that's the kind of thing we need developers sticking that sticker on the front of the house and getting a value for making resilient homes.
Can I add just one? I think there's an interesting exception to that, and that is build-to-rent developments, where and we don't have many of them here, but they play a much bigger part in other countries, and that's where an institutional investor builds a development and then rents it out long-term with security of tenure over that. And because they are actually building it and then holding it for a long period, they're incentivized to build into that energy efficiency and resilience measures that will reduce their lifetime service cost. So I think there are ways that we can drive those incentives differently, but getting the rules right is important.
No, actually, maybe the. Yeah. Try that.
Thank you. Just still on the development one. It's not just about the sustainability of the building that's developed. it's the location of the development. And if you look at what's going on around Manja, and you mentioned South Yanderup, they are putting developments right on the edge of the estuary. So going back to what you've just said, it's the location of these developments is probably even more critical than what is actually built on that site. So we need to keep that really well in mind, I think. Thank you.
Any questions? Yep.
Okay, I'm trying to keep us on it. I understand that. Is that one? Thank you.
Climate change has been around for a long time, and the most influential talk I heard was about 2007, which even in climate change terms is recent. And I thought, oh, it won't be so bad once the insurance industry takes it on seriously. We'll all start to think about it. They've been very slow. I think my prediction was wrong. I'm wondering what the dead weight is there. What's the impediment to them have been building up to this climate change thing before now? I don't know. It's my honest answer. I mean, I did have an interesting meeting with some insurance industry people a few months ago who were saying, even though there's increased awareness of it, they still are taking sort of 4 or 5 year view, and it's all based on historical data. So it's probably still hasn't washed through. And I guess in a world where they're expecting things to change, the model of assessing risk based on historical data becomes flawed. And the ones who realise that and adapt the fastest end up being the ones that succeed. But I think it's a good point. And certainly 10 years ago when I was sustainability manager at Wesfarmers and looking across our range of businesses that was like a microcosm of the Australian economy, it was the insurance business that I thought they're going to get it first. And you're right, I don't think it has gained the momentum that I'd expected, but you might have some different views on that.
Yeah. I guess I'd just kind of like to bring it back to, because I really agree with Karl's point about the incentives being the whole point. Like if the incentives aren't out there, developers won't develop those kinds of properties, and and people will build in places that are dangerous and locked into these impacts and that kind of thing. So I really think it comes back to the incentives that governments provide and take leadership on, because to me this is it's a runaway train wreck. Like these impacts are just getting worse and worse year in and year out, and I just really don't get the sense that people in Canberra, in either of the major parties, really grasp the seriousness of it. And I guess my question to you, Kate, is, do you think that because they hardly even talk about climate change, so my question to you is, do you think they actually realise the seriousness of it and the impacts on people from things like skyrocketing insurance, and if not, why?
Yeah, well, having been there for nearly 3 years, I've been really dismayed at how short-term all the thinking is, really. And they'll be lucky to be thinking about next week. The next election is as far out as anyone can think. And I think both major parties are sort of in crisis campaigning mode the whole time. So seems to be very little space for any long-term thinking, driven by the 24-hour news cycle, the constant polling, the coverage, and then the attacks and counterattacks the whole time. So there's so much noise there. And I think that's why we don't see leadership. And really, if you look at any significant reforms that have happened in our history, they require leaders that can make a case, and even if it's something that's not great in the long term, convince people that this is what's actually needed. And we see so little of that. As soon as something turns into a political attack point, the other side caves and says, we don't want to risk being cornered, so we'll just agree with that bit. Or And I don't know what the answer to that is, but of course I would say this, but I do think having people in Parliament who are not thinking about forming, winning government, not thinking about their ministerial careers, they're on the crossbench thinking about how to make the laws better and bring the conversation back to the long term. I think that is a positive way that we can move to counter the sort of swing from left and right and the constant short-termism. So that's why I'm there and giving it another crack, because it feels worth doing, and it feels like there aren't very many options on the table for how we bring better long-term thinking back to politics. So I'm backing the one that seems possible.
And Kate, how, because last election was the climate change election, and you and a number of candidates really came in and did, and on that wave, how successful do you feel you and the other climate-focused independents have been in drawing attention towards it, and what are the kind of opportunities you see in the next term to really raise the profile of climate change and get people serious about it?
Yeah, I mean, I suppose it's like when you orientating an entire economy globally, it takes a while. And I feel like we have turned the ship around, even if we haven't actually progressed a lot in that direction. So, and having a crossbench that's focused on that has created pressure, but also permission. And so I think that's what's needed, is continuing to create that pressure and that permission. So definitely we have come a long way, even though it doesn't feel like a huge change. We have a 2030 target. Looks like we may meet it. We have a safeguard mechanism, which is far from perfect, but is actually able to ratchet down the emissions of the 220 biggest polluters. So that's not nothing. We have vehicle emissions standards. We didn't have those. We were in the same boat as Russia until recently, and now we have vehicle emission standards. So things are happening, not at the speed that they need to happen. And then I think that the real challenge we have now is that cost of living has an economic management have eclipsed climate in many people's eyes. And so I think the opportunity is to make those connections between cost of living and the future of the economy and climate. And in Western Australia, we have the most to lose and also the most to win from decarbonisation. So we have sun and wind and space and experience doing big projects and all this iron ore. If we can work out how to process iron ore with renewable energy, we can save 8 to 10% of the world's emissions. So we can become essential to the world, which will be the next wave of our prosperity. And so that's the economic story that I think will be a big part of the next parliament. The cost of living story around energy, around insurance, around food. This is how we need to frame it now, while continuing the narrative about the long term. And I speak to people door knocking, and it may not be the first issue that comes up, but people are concerned for their children and the sort of world that they're leaving to their kids and their grandkids. So I think we just need to keep it on the agenda, focus on getting the rules right and the signals right, reducing fossil fuel subsidies, so that the incentives are aligned to, and being bold on decarbonising, so that we are actually creating a future that people will feel proud and hopeful to leave to their children, and also a strong economy, where Australia has an important role to play. It's a long answer, sorry.
That's all right. I'll go to you in a second, Piers. Can I just, I just want to, and thanks for that answer, Kate. I just wanted to ask Karl something too. Karl, we've discussed this before, but and you brought this up in your comments, which I thought was really interesting, is the misalignment between who's causing the problem and who's paying for it. And I mean, we're talking about really massive costs that are just increasing year on year, and all of those costs are borne by ordinary people. So whether it's through higher insurance premium, through paying the costs yourself because your property's damaged and you've got uninsured losses, disruption to your life, impacts on your health, all those kinds of things, they're costs that are being imposed on the public every single day of the year, and often people don't draw the connections. So the Australia Institute, our proposal is to put a levy on fossil fuel exports, and we charge them a certain amount for every tonne of carbon that they export, and that money goes directly into compensating people for the damage that's been caused. Then you have an alignment between the people causing the damage are paying for it, and that would massively reduce cost of living, or is potentially massively reduce cost of living pressures on ordinary Australians, right? And you could even apply it to insurance, and there's difficulties with that because of perverse incentives, of course. But so to you, Karl, I'm just wondering if you could say a bit more about who you think should pay and how.
Yeah, thanks, Mark. And I think if we pick up Kate's comment, which is, about fossil fuel subsidies, this is one of the biggest subsidies, which is lots of mums and dads paying extra insurance for something they didn't cause and which they have to live with. So, this is a little bit of a subsidy that everyone's paying. Look, it's an interesting one. I think I'm a bit of an optimist on these things because I have an engineering background, and maybe I'm a bit like we can solve these problems if we want to. It's only an issue of will, and WA has been somewhat of a leader. Like we talk about wind farms and things like that, but the Esperance wind farm was one of the biggest wind farms in Australia for a long time before it was Australian built wind turbines. And it was a bit of a beacon for a long time there while the rest of the industry caught up. So there's lots of opportunities around those that we know, but when we look at who should pay, I think the hard reality is if someone can't afford an insurance premium of $5,000 or $10,000 a year, they sure as hell can't afford the adaptation cost, which could be 50 or 100 grand, to get themselves flood proofed. Or fire-proofed or cyclone-proofed. So we know that they can't afford it. We know that in a way they're the victims, that it's not through any fault of their own. And I have to say there's an awkward bit in all of this, which is, as again, Kate said, we've got to watch out for just kicking insurers. They're really easy to kick because no one likes them. You give them money and you don't get anything back. Unless adversity hits, and then you really appreciate. For the rest of the time, you kind of go, "I wish I didn't have to pay it." But the bottom line is, we do need them, and therefore, if with government, they're taking money when it's the sales tax and the rates and the it's everyone's. It's a bit like the homeowner's wallet is everyone's having a dip into it, and then suddenly there's a problem. And everyone's going, "Oh, you're on your own, it's buyer beware, or you should have known," or something. And that just seems preposterous. If you're going to say you can buy a home here or you can build one, then you got to back that. And again, the developers, if they've bought some land in good faith and they want to build on it, there has to be some compensation to say, "Look, you know what, buddy, you can't build a block of flats here. It's not safe. Here's your money back. Here's some other land. Go and build it there." Governments have the opportunity to create. They create property rights and they can take them away. But we need something where we're not disincentivizing people to do the right thing. And in that case, if we want to withdraw properties, if we want to adapt them for climate change, then we need to compensation mechanisms. I mean, I like the Australia Institute model, which is that we could put a levy on exports. It seems to make sense. I don't see that anyone's a loser out of that. And then we write that. But the thing that worries me that I do a lot of talks to young people, and young people are in a bit of despair about climate change. But I go in and say, do you know what? When I started my career, wind farms were a joke, solar panels were just on silent satellites. We would go into meetings saying, what about renewable energy? And we'd get laughed out. Now, I go into meetings and someone says, what about coal plant? And they're the ones that are laughed at because everyone knows it's financially ridiculous to build any new fossil fuel without expecting that it's going to be a white elephant before long. So in a way, what my sense is that we've already kind of won the battle, which is we've got to the point where renewables are cheaper, and we're going to get there. Whether we like it or not, we'll end up with a low carbon future. The problem we've got is we've got to close down our fossil fuels faster and stop emitting as quickly as possible so that we give ourselves as much room as possible to have the adaptation. So that's why I think with this, connecting the real cost of using fossil fuel with, homeowners, farmers, businesses is one way that we could say, hang on, if you're going to make fossil fuel, at least pay the real cost of using fossil fuel, and therefore a levy makes sense. And I have to say, we've seen it in the LA fires, the idea that there could be class actions against fossil fuel companies for worsening the problem. We've seen fires in the middle of winter, which is ridiculous, and I think if we don't see government leadership on this, we could see just a sort of a load of bin fires of litigation. But I do, again, and I'm interested in Kate's comments, I think the James Hardie example is a really good one. We had a lot of problems with asbestos. People were dying. We knew what the causes were. And in a way, with companies coming up to the table, including government leadership, we ended up with an orderly scheme. Companies were providing an orderly amount of money, and that was getting to the right people. I wonder what your thoughts, Kate, are around about the idea of government providing a sort of orderly mechanism to get adaptation into the right hands, or property buybacks and so on. Whether you think, in your experience, whether it's plausible, or it would just be too hard to get all the people right around the table to get a sort of, bipartisan view on this sort of thing.
A bipartisan view sounds challenging at the moment, I'd have to say. And I think it's a good idea. It needs to be framed as you have, as this is something that's caused by all of us, or no fault of the people who are suffering the damage. And that's why there should be some compensation of some sort. It gets pretty complicated as the information is better known about the risks that exist. And I imagine there would be a bit of an element of, when someone does know all the risks of developing in a particular area, or building in a particular area, and they still go ahead and do it, at what point should we all share the cost of that? So I'm sure it would be a challenging thing to design, but at a fundamental level, in order to get anything that looks like bipartisan support, there will need to be broad community appetite for this sort of action, and a recognition that that this is happening, and it's inevitable, and that people are suffering, loss through no fault of their own. I mean, we managed to roll out the NDIS, and it's had plenty of challenges along the way. But I think there is a broad sense that if someone suffers an injury or is born with a disability that changes the course of their life, that we all want to live in a society that protects from that. So finding parallels with those sorts of programs as the public awareness and acceptance of the implications of climate change would be an important part of building a platform for multi-partisan support.
Piers had his hand up quite a while ago, so I'll just go over to Piers, and we might have to wrap up the questions after that, because Kate and Karl have already given up. Does that work, Piers?
Yes, it does work. Great. Firstly, thanks to the Australia Institute and to Kate in particular. I think it's pretty rare that you come across a politician that's as well across their brief as Kate, and we've heard another example of that tonight, so thank you. I think, for some of the reasons that have been mentioned about the politics of this, it really reinforces why we need an independent authority that's independent of government to be across these climate change related issues. And beyond that, I think we actually need an independent inquiry into the financial costs of climate change and the impacts on not just us through insurance, but also on our other costs of living that we bear through the exposure that we pay to, for example, government ownership of infrastructure, which is also a very, very significant cost, especially a significant insurance cost. But I just wanted to remind people, I'm and my partner, we're in the state emergency services, and every day we get SMSs saying there's call-outs about various things or deployments to other places to help out with and almost all of those are related in some way to weather events. And I think we need to remind ourselves that in Australia, our entire emergency services capability is actually delivered by volunteers. And one of the aspects of that is that that's not costed. It is a cost to our economy, but it's not a cost that you can look up in the budget. And you can also extend that to volunteers who attend bushfires. So we've got the professional firefighters in the metropolitan areas, but anywhere beyond that, it's volunteers. Now, when we think that the assets that are being protected by these volunteers are actually some of the most important assets for protecting our climate, that is the natural carbon that is in our ecosystems, we've got a big risk exposure problem. And by the way, those carbon assets aren't insured. They're in our national parks, they're in our pastoral leases, they're largely government owned. They're not even costed. And they're impacted by extreme weather events and climate change and bushfires and all those things in the same way. But that costing, again, like the volunteer attendance of emergencies, is not costed and it's not transparent in our budget. So I think this is why we need some sort of independent analysis of all of these kinds of risks and all of these costs, because they all bear eventually on our cost of living, right? We have to pay the taxes that maintain our government and maintain these assets. But unless we've got a proper valuation and understanding of them, we really don't know how they're actually having those effects. So I just wanted to throw those things in the mix. Not sure it's a question, but again, thanks, Kate and the Australia Institute.
Yeah. Thanks, Piers, and I think it is an excellent question. It's a great idea, Kate, in my view, that there would be a parliamentary inquiry into the cost of climate change on ordinary Australians and what to do about it. I mean, what's your thinking on something like that? Because it'd be a great way to actually, because as you say, the complete failure of leadership. The Prime Minister doesn't even talk about climate change, right? He just completely ignores it, and same for many members of Parliament. I mean, just to have an inquiry along those lines would be an opportunity for people to actually understand the impacts, because at the moment I don't think people have any idea of what's going on. So I think that's a really interesting suggestion.
Yeah, it's one of the things that I've been pushing for is to try to get the Office of National Intelligence the report on the security risks of climate made public, because they've got this report that talks about all the international security implications of climate change. And I've had a briefing on it, and it is information that should be in the public sphere, because it's very difficult to make a case for change if people don't have a deep understanding of what will happen if we don't change. And so I think that a parliamentary inquiry is a good idea on the impact on cost of living. That would be part of the puzzle, along with the security risks. We need to paint this whole picture. We haven't even done a climate risk assessment at a national level. So there's a lot of work that needs to be done to paint the picture, to articulate why it's important. And again, it comes down to that short-termism that we see from the major parties, that there's just not a lot of incentive to push out past next week. So it's definitely, I think, an interesting idea.
Thanks very much. I think...
Can I jump in on that one, Mark?
Sorry.
It's Karl.
Oh, sorry. So it's late. Sorry, Karl.
I think that point about critical infrastructure is quite interesting as well, because one of the things that we know is that communities get very, that the psychological impact on communities can be very scary when they lose power, and especially telecommunications when they lose contact, and that's something we need to be aware of, and also that the infrastructure sector is trying to take a lead on hardening systems, to be more resilient in terms of providing that. But one of the things we also see in terms of a cost is that, imagine you've got a business that's kind of going, well, what's the climate change threat to my business? And they look at the premises and so on. What we find is that the possible impacts are much greater if you look at the surface area of their critical infrastructure. So if you've got an office and it needs the doors to open, the roads to be clear, the telecommunication to be on, the power to be on, the water to be on, there's many more modes by which a business can be disrupted, and these have a knock-on effect to the economy. And so this there's a sort of invisible economic impact, and roughly the numbers that we found is about 5 to 1, which is that for every $1 of insured losses, about 5 of economic losses that come in. Now, one other thing that I think we've got to be very careful of, and again, I liked Kate's comments about NDIS, which I thought were quite refreshing, because one of the things we've seen when events go and you've got losses is that everyone was looking around someone to blame, and they're looking at someone to sue in order to recover their costs. So in California, we've seen the electricity company sued. It's all the coal fires they started. Have a crack at. And we saw that with the Brisbane floods. I don't know if people remember the sort of 2013, when you saw Kevin Rudd and the barges and blah, blah, blah. Well, SEQ Water got sued successfully for losses around that. It was on a technicality of how they managed because you've got, the problem there is you've got a dam that's used for both water supply and public management. So they're sort of damned if you do and damned if you don't. If there's a drought, it's their problem. If there's a flood, it's their problem. Now, what you can have is a perverse outcome, which is that those utilities become more and more timid in what they're trying to do, because they cop the blame when you've got an underlying trend, which, again, as Kate said, from her insurance days, is going up. So, what did the electricity company, what they're doing, for example, they're turning off the power. If it's a hot day, they just turn off the power because they're going, well, then you can't sue me, can you? Because I turned the power off. And then you've got another economic impact. Or SEQ Water is going to say, well, in that case, I won't manage the flood for drought. I'll just manage it for floods, and then we'll run out of water, but we'll run a desal because at least you can't sue me. So you get these perverse outcomes to the utility management if we're trying to essentially find a scapegoat. And I think that's, again, I think the NDIS thing where you're just kind of going, can we move forward with a no blame type approach and go, as a society, how do we want a society run? And have a holistic view. So I think that's really worth thinking about in terms of whether there's some learnings from NDIS or other schemes where we can try and move forward without opening it up to the lawyers to have a field day trying to find someone to earn some coin from, but instead say we're in a new regime now, and maybe we just got to accept a different way of running things. Thanks,
Karl. I think we should wrap it up there, because Karl and Kate have both stayed much longer than we asked them to. So I'd like everybody to just thank them both for attending. And thanks everybody for coming. I really appreciate it, and the great questions. And sorry we couldn't get to everybody. I'm going to hang around for a drink after, so I'm happy to chat with people, but I'm not going to commit Kate to that. And Karl's got an easy out there, so being in London and all. One thing I would say to people is we're pretty committed to this idea that the fossil fuel industry should pay for this train wreck. If you agree, you can go to the QR code on this little fact sheet we've got, and you can sign a petition saying that you agree, and 20,000 Australians already have, and we're going to be pushing really hard on that over the next few years and build support to make sure that the people who are causing the problem are the people who pay for the solution, not us. So thank you, everybody. And thanks heaps for coming. Cheers.
Thanks for watching, and a very special thank you to all our supporters who help keep us running. We're not funded by political parties or fossil fuel companies or government, but by people like you who know the importance of evidence-based research in shaping the critical decisions facing Australia. If you'd like to support us to continue exposing inconvenient truths, challenging vested interests, and explaining the big issues in plain English, please consider making a tax-deductible contribution today. Visit our website australiainstitute.org.au to find out more.